Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kerschner, and Chaz Price. 419-794-3030 is the phone number. Online, arhq.com. We talked about the stealth tax that comes with the cost of living adjustment in Social Security a little while ago. Let's talk about another sneaky tax here. Well, let's start with this. Death is awful. It's hard, and it is unavoidable. And I know you guys, I know the office, you tried to do your best to make that process a little easier. Recently, one of the subscribers on the YouTube channel, which you can get to by going to YouTube and typing in America's Retirement Headquarters, they asked about the widower's penalty for Social Security. Guys, what is this? Can you talk about what it is and exactly what that means?
Yeah, we spend a lot of time talking about taxes, talking about Social Security, and this is one of our YouTube comments that had come in, and we appreciate that, Missouri. We love your comments. Always reach out to us, and anytime you have a comment, want to ask us a question, there's a lot of different ways that you can reach out to us to get your questions answered. And, when you look at it, when one spouse passes away, the tax filing status, the Social Security income tax limits change, and there's also a loss of income, all which impacts that surviving spouse. So in general, what happens is one person usually gets to keep the larger of the two Social Security benefits, but they're normally going to lose the other benefit. Number two, without the proper re-registration in the get-go and the proper legal documents in place before something bad happens, the surviving spouse could end up in a situation where they're spending money on excess fees, cost, and really the process known as a probate process. I had met somebody in the past who was building their own business, and for his business account, he just set up in his individual name, and his business was growing great. But when he passed away, it was individually owned, and so that account becomes probatable. Things like how the house is titled can be probatable, or if you have investment properties, these are easy ones that kind of catch people off guard and get them into that never-ending costly loop of probate. Number three is looking at the surviving spouse and now becoming a single tax filer. So a joint couple with $80,000 worth of income, could fall in the 12% tax bracket. Yet when one person passes away, if the income remains the same, the tax bracket jumps to 22%. And, I think the overwhelming majority of us would agree that when somebody passes away, the lifestyle doesn't really change too much. I mean, you have the same house, you have maybe one less vehicle, but you're still going to go out and do the majority of the spending and activities that you did beforehand. And so usually you can see another jump there. There's also the potential for more taxes on Social Security. So a individual who files a federal tax return as an individual with combined income between $25,000 and $34,000, you can pay taxes up to 50% on your benefits and have 50% of them be taxable. More than $34,000 and up to 85% of your benefits can be taxable. But a joint filer, and in this situation, they have combined income between $32,000 and $44,000. That's where the 50% taxable benefits come in. But more than $44,000, up to 85% of benefits may be taxable. So again, higher taxes could also be another problem for somebody when you're looking at the taxation and how provisional income works with taxes. And then the fifth one that we see oftentimes is, the potential loss of a pension income. So if you were blessed enough that you had worked at a company and it's been maybe years since you had selected and filled out what benefit you wanted, you may not be aware of what the loss could be of that pension income. So to me, I would say bottom line is, run the analysis and really have a plan in place. Most people we talk to have some form of plan. It could be a simple plan. Maybe they get from logging into their employer 401k that they have some tools. Maybe they've met with somebody that ran a basic financial plan and showed them some probability of success. But, what I think is that a lot of people have not looked at just that specific time frame that says, when one person passes away, how is this going to impact the widower's penalty? And what are the steps that can be done now ahead of time to try to eliminate, address those, and make sure that it's not as big of an impact. And certainly, I think working with an office like ours, I think, one of my toughest jobs is getting a phone call of somebody that I developed a long relationship with, somebody that I consider part of our family, and hearing that, somebody passed away. And the reality is, it isn't unavoidable. But, what we can do as our office is put all of our team of resources available to help guide them through that process to make sure we're crossing the T's and dotting the I's. But this widowage penalty is a good one to learn about now if you haven't thought about. I love my spouse and I want to make sure that I take all the steps now to minimize the impact of what could happen to them.
I said at the break, it was kind of funny. We were laughing. I said at the break, I learned something every day here. Well, I just learned something else. I've never seen this or never paid attention. I mean, these are things that are not in my lane, okay? This is what I depend on you folks for, and I do have a great financial advisor, obviously sitting here at the table with me. But here's the thing to really think about. I have not thought about any of this. Haven't thought about it at all. And, I mean, it's real. We've put together the Ultimate Estate Planning Guide, and that kind of can help prepare you for some of this, to make sure you have some things put in place so you know who gets what, when, where, and why, and how, and all of that kind of good stuff. We put all of that together, and if you want a copy of that independent, or not the independent, I get confused with that sometimes, but the Ultimate Estate Planning Guide, reach out to the office. We can get you a copy of that. It'll help document and put some things together. But, boy, this is an eye-opener for a lot of people. And I got to believe there's a lot of people out there like me that just don't think about this stuff. Life gets in the way, You're busy doing things on a day-to-day basis, and bam, all of a sudden, something happens like this.
Well, it's because they don't want you to. And just from the last segment, this is another example of a stealth tax. It's something, that you wouldn't necessarily notice on a regular basis. So, in addition to that, you've also got the issue with the tax deductions. Not only is a widower not able to file a joint return after the spouse passes away, but after 2 years, they can no longer use the joint deduction. So you lose some deductions, and I think that's just one more example of why it's so important to come in and do a tax analysis for us and to look at trying to get your traditional IRA or a big portion of it into a Roth IRA. Because let's say, for instance, that happened. Now we're faced with lower standard deductions. We can't file jointly. It's going to be helpful to have a lot of our income in a Roth IRA. And so according to a Forbes study, paying taxes now at a lower rate while your spouse is still living, when you can take advantage of those married filing jointly rates and deductions, can significantly improve your tax situation and your retirement prospects because you've got tax-free income in the future. And, when the surviving spouse is likely going to be in a higher income bracket as a single taxpayer. So it's a stealth tax. It's a good point. It's definitely something we can help you plan for ahead. But once it happens, there's not a whole lot you can do. It's just the rule.
It's one thing to know about these taxes and penalties that are going to happen down the line. Another thing to actually have a plan put in place. And just by knowing about it, you could be aware of it. When you come into the office to speak with the guys at America's Retirement Headquarters, you can start developing a plan around what is going to happen at that point. Preparedness, and be prepared. That's the Boy Scout motto, right? And so you want to go ahead and be prepared as well. They can help you through it. We understand it's not a easy topic to discuss, the loss of a loved one, but it is a reality that so many of us face, and being able to make these decisions, have that plan in place now, is a lot easier than having to compound with the loss of a loved one and to say, well, what do I do now? Have that conversation, 419-794-3030. You can also schedule time, request a copy of the Ultimate Estate Planning Checklist, or inquire more about the tax roadmap by going to arhq.com.